I'm joined by James Bevan from CCLA Investment Management. James, I just want to start by asking you about the overhaul we've seen, fascinating developments at the very top of HSBC. How much of a disaster is this for the bank to have the chairman, chief executive and finance director all change at the same time?
Well, I think HSBC is an incredibly well-resourced company. It has a very ample array of top-quality management, and I don't think this is particularly important in the context of the company's strategic strengths, which are enormous, and I would regard HSBC as actually the best placed of the British banks.
Will there be much concern, though, amongst investors that all this is happening at a time of regulatory risk? We've been speaking about the UK Banking Commission, and they've now come out this morning saying that the separation of investment and retail banking is still an option. It's still on the table.
Indeed they have, and there's an awful lot of discussion about how banking crises should be avoided. I think the clear and certain expectation is this is still a government that favours a capitalist solution to the globe's problems, and therefore we still need a vibrant banking sector. I think one of the big challenges for the UK government is if it says, look, actually, guys, we want you UK banks to be sliced and diced because actually we want more competition. They're going to have to reverse the HBOS Lloyds merger, which clearly was government supported. They're going to have to address also what they do with players like Santander, which of course not British banks, but are huge within the UK banking sector. So I actually believe there'll be a lot more sabre-rattling than hard action. And I think that we're going to see banks like HSBC and Standard Chartered in a global context doing really, really well.
And because, of course, HSBC is in a different situation, it's important to make that distinction with other banks because it has, analysts say, it's managed to navigate the financial crisis relatively well, and, of course, it hasn't needed a government bailout.
Absolutely right. And I think when one thinks about the real challenges that lie ahead, I think it's about balance sheet strength because, of course, at the moment, as we know, there's not a great deal of demand to borrow money. And I think when we see that appetite, two things will happen. First of all, we will have to recognise that only the stronger banks will be in a position to lend and therefore to grow market share. I think the other challenge for equity markets generally is that, of course, if banks lend money to people, to companies, they're going to lend a lot less to governments. I think that could foment a crisis for the government bond markets.
So when you invest in financial stocks, you are looking more at the big international banks with emerging market exposure as opposed to, of course, the smaller regional lenders, particularly in Europe.
Well, I'm very nervous of banks like Bank of Piraeus, the Greek bank, but actually I think that in Asia are some very interesting banking opportunities at the local market level in Thailand and elsewhere, and also in Brazil, some very good local banks that people should look at.
Now, James, you own shares in GlaxoSmithKline. Are you at all concerned by the impending withdrawal of Avandia, which is, of course, the world's best-selling diabetes drug, and the financial impact this could have?
It's been extremely well flagged. Glaxo themselves made significant provision for the legal challenges that they have been facing. I think that in a European context, Avandia itself is worth about 0.5% of 2011's projected sales. So it's a hit of sorts, but quite a modest one. The real strengths for Glaxo seem to me to be a broad and well-diversified product strategy, which gives them genuine growth opportunities, plus good quality long-term growth, particularly into emerging economies.
James Bevan, Chief Investment Officer at CCLA Investment Management, thanks so much.
Thank you.